All right, everyone, here we are with ticker symbol WKHS, Workhorse Group Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Workhorse has actually been in a bearish run for some time now. Obviously, it's been falling since October 12th, and here we are now at 1936. Now, there was a lot of volatility before the recent high of $30.57 around that area because there was a rejection from that point, and that's how we've ended up here. Now, before that $30 and some change, the highest point was way up here at $31.20. So since that point, there was a big rejection and it hit a low of about $20.30. And I had stated if it broke through that, this could start to hit newer lows. I've talked about it in my previous videos. And there was a lot of volatility before hitting this recent high of $30. And this is quickly now hitting newer lows and newer support levels. So as we zoom out, this is actually taking a turn from actually where it was. Instead of, going up, leveling off, going up, leveling off, and going up, this is actually creating more of like a, if you kind of just draw it, a U-turn. This is going back in the other direction. Now, the question is, could this actually change trajectory, right? Could it actually stop itself from falling in this direction and actually level off and bring itself back up so that the chart can continue to do what it's intended to do for investors, right? Investors want to see Workhorse continue to grow, continue to innovate, and continue to expand so that it can actually be a growing company. As of right now, there's a lot of uncertainty with Workhorse, and there hasn't been any great news that can support this to stop it from falling any further. But those are things that I'm just seeing here in the chart that I want to point out, and it's important to keep those in mind. Doesn't mean that that's exactly what's going to happen, that it's going to just continue to fall like I did the U-turn. Doesn't mean that because I drew that and it's going to go back up, it's going to go back up. We got to look at this closely as we have been, and we're going to look at it real close as I zoom in just a second. But some important things here is the lowest point that this reached, which was in the leveling off after this bullish run, leveling off before it continued, is way down here at that $13 mark. $13.40, 38 cents, around that area, give or take. Super important numbers if this continues to go down. Now, before getting to the 13 mark, there's a low point here of 1680. I'd write that down before it shot up, and then it did this whole up and down volatility, and where we're at now, and it's actually looking like it's just going in a sideways direction from when it shot up, it fell down, and we're going this way. It looks like it's just going in a sideways direction, and we're just a little bit below the sideways direction. So the bulls, if they were to recover from here and bring it up and go down and go up and go down, then this would actually be showing a sideways movement. But if this continues to hit newer lows, obviously there's a lot of uncertainty, fear kicking in, and profit taking or also cutting losses from this stock. And as I stated, $20.38, 40 cents, give or take. If that got broken through, we would see newer lows. And here we are. The support was broken through, and we're below the 50-day moving average, and the bears are dominating this chart. So let's move these to their new location so that we can see what is important for tomorrow and also see what the bulls and bears need to do to change the trajectory of either way of this is going, right? So the first thing is the 50-day moving average. The 50-day moving average is 2082. I'd write that down. Super important number due to the fact that 2082 is where we know what side of the chart we're in, and if we're below it, we're in bearish territory, and if we're above it, we're in bullish territory. So the bulls need to cross 2082 to get across into bullish territory. Now, before crossing the 50-day moving average, they need to cross the resistance level. This resistance level is 1983. They need to turn 1983 into a support to start to work their way up and build momentum to reach the 50-day moving average and cross it. Now again, as always, I state this in most videos, 1983, which is the resistance level in bearish territory, being crossed does not signify that the bulls have gained control. This is an indicator to allow us as investors to have a sense of direction of where this is going. So if 1983 gets crossed, turn into a support, and the bulls can pull away from it, that signifies that there is momentum to possibly get closer to the 50-day moving average, working towards their goal to cross it and get back into bullish territory. So it's important to keep that in mind. So before getting anywhere up here, the bulls need to break through 1983, turn that into a support, and break away from it. Now, on the other hand, we have what the bears want. And the lowest point reached in this bearish run, right, where we're at right now, is 1882. This has been falling since that point. 1882 is the lowest point, so keep that in mind. But before getting there, there's another low point, which is the lowest point before the bulls reappeared. And this is the highest point that the bulls reached before leveling off, and leveling off to 1936. So our support here, before even worrying about 1882, is 1910. I'd write that down to go ahead and keep that in mind. I want to emphasize to all investors, if 1910 does get crossed, I'd pay close attention to what's going on between 1910 and 1882. How quickly is this moving to newer lows? Is it hanging out sideways, giving a chance for the bulls to reappear and bring this one back up and stop it from hitting newer lows? Or are the bears tearing this one down? They broke through support 1910, hitting newer lows fairly quickly and pulling it away from the 50-day moving average in a downward direction. So super important to keep that in mind. I hope that with these cues, every investor is well equipped for tomorrow's trading day. And also keep in mind, if you're a first-time viewer and investor, I'm about to talk about a video that's going to pop up soon. Also, if you're a first-time viewer and investor and you feel encouraged or inclined to subscribe, you're more than welcome to. Don't forget to click on the bell, share this with your friends and community, and don't forget to hit the like button, guys. It really helps out the channel, helps out my videos, and I really appreciate that. That's one of the simplest ways to say thank you, and I really appreciate it when you guys click on that like button to let me know you guys watched this video. And at the end of this video, there's going to be a pop-up video. In that video, I talk about the S&P 500 index and how it's been rising several points on scheduled dates. On these scheduled dates, the S&P 500 index is rising up due to Federal Reserve pump dates. The Federal Reserve pump dates are on these dates that you see the S&P 500 rise due to the fact that it's showing it in the charts. You see it in the dates. I'm talking about it in more detail in the video. But what does that mean for us as investors? Well, if the S&P 500 index is rising several points, then there's individual ticker symbols rising up with it. That's great news for us because it's an opportunity to make profits. Now, in the video, I don't talk about guarantee you profits. I don't talk about telling you to sell, buy, or hold anything. I am just here to enlighten everyone on the great news that there's an opportunity to maximize profits and minimize losses. Check out the video. It's very informative. If you haven't already had a chance, should be popping up soon. And if it's going to pop up, not now, it's popping up shortly if it hasn't already. And thank you guys so much for watching. Click on that video and let's make some money.